Okay, good. Hello, everybody. My name is Max Farrell. This is DEX, and in this webinar we're going to be doing today, we're going to be sort of pasting together a few things here because we're having a small issue with the webinar series system this morning. So we're going to get that worked out over the next couple of hours here. Welcome. It's Monday, and what a fabulous weekend it was. I have been trying to find the hole where I can climb out of with all the coding and everything else that's been happening. But if you haven't been around for a little while and you're getting in for the first time today, this is one of your first webinars, be prepared. There's a lot of stuff that we're going to cover today in this Forex forecast. So let's get started. The topics we're basically going to be talking about is the SR Max. And that's the new signal system that we have that just came up that's very, very powerful. And really, that's about it. We might be able to get in some time, if we can, some DEX 5-minute MDM stuff, okay? And I don't want to promise you anything. I just want to really focus on the support and resistance max process and go from there. Today's very important. Keep your, what do they call that? Your learning caps on. Pay attention because there's going to be a lot of stuff in here, but we're also going to be doing some questions and answers right after as fast as we can because I have a consult right at 1 o'clock. I'd like to have a consult with Jonathan, who's in the room. All right, so let's get started. Now, before we get punched into the numbers, remember that all of this takes risk. All of it is education and trade assistance only. And if you're here for anything else, like for the sure thing or what have you, it doesn't exist. So just keep that in mind, that this is all about learning how to trade and do so wisely. So if you see me doing well, or Jonathan or Paul or somebody else within the room that's doing well, it doesn't necessarily mean that you're going to do well as well. It all depends on your own personal persistence. So we're going to talk about trading the DEXR Max. But before we do, let's just have a quick conversation about what this really truly is. This basically has been a culmination of 2 years worth of data collecting from the daily signals. Once we established that signal base, we knew that there were parameters that we could test that could make this thing better. But we also knew that the indicators and strategies that were pre-existing that were giving us data, all of this stuff was coming from the daily signals. And we were applying it to such because we knew that once you created a line, once we created a base, we could actually really just focus on tightening that base structure. And this is where the current intraday signals are coming from the trend reverse as well, because we were noticing that when the dailies were performing that range, there was a base of trend reversal at certain points. So we were able to isolate that and pull in the intradays. We then even tightened that information up, which has been running for about 6 months, and we were able to tighten that up with some information from the dailies and tighten it up even more to get to what we call the SR Max. And what does this stand for? Well, the DEX, of course, stands for us. The SR stands for support and resistance, and the Max, it's not what you think, right? It does stand for maximum, and the second X is really, it marks spot. This is a pinpoint successional trade, what we call an emergent process, right? So when it gets to a certain point, we're using about 3 or 4 indicators within the system to be able to dive into a precision point where the strike is going to be. And that's very, very important to know that because it's so precision that we had to come up with an exit strategy. Okay, first and foremost, we news avoid everything. Okay, now there's sometimes where news might sneak up on us and get really close to one. I'm trying to add as many news events as possible. I'm really have all the big boys in there so far. If something new comes out and our system doesn't pick it up, don't worry, I'm aware of it. Okay, so if you see something that's in there that hasn't been avoided, then simply use your best judgment to whether or not to avoid from that position or not. One of two things have happened. Either our system didn't recognize the news clearance in there and seen it as something different, or we just didn't validate it to be something that could affect the market at that point. But use your own experience and guidance, okay? Scalp out system. As we all know, that scalping is a very difficult thing to do for both sides. Okay, I say this all the time, that we always have to have a balance in scalping, right? If you're going to do scalping, you can't just scalp out the positive, right? You got to know when it's no political stuff in here, please, Benji. You know that if there is a positive and negative to a trade, a positive being positive cash flow and the negative being in the minus, then the true process of a good scalp system means that you get to actually do what we refer to as balanced scalping, right? And this is very important, because if you're constantly scalping out about $20 here, okay, but then you're always letting it go to expiry and lose when it does lose, then you're really, that risk management's not really that good, is it? So what we want to do is be able to minimize this. So if you're going to be scalping out for about $20 from that position, then you also want to be able to balance scalp this out. So you don't want to be in minus more than 50% of your risk, right? So if you're risking about $70 to $80 per trade, you really don't want this to get to $35 or $40 or $50, right? So we had to devise a process that allowed us to do a scalping solution in here. And what that means is that we had to get this to where a process would tell us what was going on, okay? And what this turned out to be is, as we applied one indicator over another, over the loss information. Now this is where it gets pretty cool, right? We were basically able to go and isolate the variables within all the loss information. So as the signals would lose, we found that what one indicator would predict that it was going to go against itself. And we couldn't, for the longest time, we couldn't find it. We couldn't find a good, consistent process, because most people try to find an indicator on the entry point of a trade. Not many people try to find them on the exit point of a trade. And because that sometimes indicators are great distractors, okay, most people think, oh, I see the pattern, I see the pattern. And then they start using it and it fails on them one time or two times or three or four in a row. They can't survive the drawdown, so they dismiss it. But what we did is that we took a process of using the MACD, which is the Moving Average Convergence Divergence indicator, and isolated the variable in there that shows us consistently, and I don't mean just like 60, 80%. I'm talking 98% of the signals that fail, 98% of the signals that fail do so when there's a crossover of the MACD between a certain time of that trade. Here, let me jump over and I'll show you real quick. Here is a trade I got into this morning, right? Here, let me pull this up here. DEX SR Max. Am I on the right sheet? Yeah, okay. Here's the DEX SR Max. You can see easily that I got in at 24.56 for a 12 o'clock expiry. 24.56 for a sell on the 12 o'clock expiry. Now let's go over to the page here and go to the British Gold Pound, and I'm going to find 12 o'clock on the sheet here. Here's 12 o'clock right here, okay? And here's where the signal came out, okay? The signal came out here. We were doing great, we were doing great, and 11 o'clock hits, and this pretty much is a safe zone. From this point to this point is usually the only time a crossover will happen. If it happens way back here, then we're in some issue here, right? Something failed in here. So we want to make sure that you know that, right? So if you see a crossover happen in your first hour, just get out. Whatever you do, just get out, right? Because the market's either some news got in or some big huge thing came out. So, but what happened today was that this signal came really close. So what happened was that at 11:15 we had a touch, right? And this is the frustrating part, is that from 11:30 to a half hour before something expires, if there's a crossover from a half hour on, you have a very good chance of still winning the trade. But I didn't want to chance it because it's live money, right? So at this point, this happens right there and then really confirms it at 11:30. So the crossover was really at 11:15, so I didn't want to chance it that the confirmation be just because it was 11:30. Now, when this confirmation hit right here at 11:30, I was only $6 in the hole. That's after I was $5 in the hole on market price, or $4.75, and then minus $2 for the fees, right? So when that happened, I easily got out. Now, the woulda, shoulda, couldas, right? Oh, you should have stayed in, you should have had this. They all ran in my head. You know, you get that little bump on your head, right? That you go, I should have stayed in, because look at it. It's still won by 9 pips, right? And so there's a lot of woulda, shoulda, couldas. But remember, this is a learning process for a lot of us as well. Was I able to get in and get out? Absolutely. Right? I was easily able to get in. And look at this price, $36. Actually, I could have probably hit 39 if I was quicker, because I kind of stuttered for a second just to make sure. Okay? And there was even a time that I possibly should have scalped out at $21, you know, because it was getting really close to 22. I like to see 22 on my profit margin. I could have scalped out at 21, but I was like, let it go. All right, let's take this thing to that point. And I pulled my take profit working order off. You know, so there was even a point of that. And I did record this trade that's on the DEX Trader Trading Live with Max. So you can see it unfold and what actually was happening. He explained that process. So you can definitely see that. So as a trading system goes, knowing when to scalp out is the toughest part. If you begin to make it more of a methodical, mechanical process, that when these 3 things hit, you will save yourself so much time and money. You really will. Okay? Because there's okay. I got to go check this now. Just give me 1 second, because it's 12:15 and I want to check the market right now to see where we're at with that Euro JPY. We're probably at that point. Okay. So this is one of those times now where, can this still fail with no direct crossover? Okay, because we got into the trade for 129.49. I'm 1 pip above my average, so we're still doing okay, but we haven't crossed over yet, right? Could this still do that? We got about 40 minutes left, 45 minutes left. There's the bar, so still no crossover. So I'm going to stay in. I'm going to stay, even though I'm at 2 pips. There's a possibility I could lose this trade, but again, there is a very low rate of loss with this trade, with this trading system. And so far, on the big stuff, on me trading the actual value from the signals, I have not lost a trade fully yet. I haven't put, because this is demo here and this is live. Okay, this is the first one that I've sort of taken a small hit on since, let's see, there we go, since here. And even then I took a pretty big hit on this one. See what I'm saying? So doesn't take losses very well, right? Because you're not going to lose the farm there. Now, if I do get the crossover on that, and I'll see what that is here in just a few minutes as we move on. All right. Keynote. Let's go over a few things here, okay? In preparing for the trades, we want to be able to prepare for the trades by validating a few things as we first get the signal, right? That there's no pair divergence. And this happened a couple this morning, okay? And I'll cover what this is here in a second. The pairs going against each other basically is what we're looking for, right? We'll also be looking at, is there a good price available, good market price on the DEX? Is it OTM, out of the money, which means, is it outside that strike period? Is it breaking the statement already, you know? Is it ATM? Is it right at that pair, you know, within a pip or two on either side, or on below the side? So within 1 pip or at that same pip as the actual strike price is called ATM. If it's out of the money, okay, if it's above the strike or below the strike, depending on which way you're selecting, then it's OTM, right? And then is it ITM? So basically what you want to do here, and we'll discuss each one of these as in detail here in just a few moments, but you want to validate whether or not it's OTM, ATM, or ITM very quickly, and you have to know how to do that. Another big question is working orders. And I say, sure. until, you know, maybe the last hour or unless it crosses over. You know, you want to keep that basis of availability of having a working order. Excuse me, that snuck up on me. If you get there and there's no good price, then set your good price. What price do you want to see? $25, $30, $45? I mean, you don't want to get that high with 45, but if you're getting these things at like $25 to $30, okay, it's going to fill. If it's going to, if you don't have a price when you first get there and you place that working order, make sure that you cover your risk. Make sure that you're adjusting your risk value, right? That $30 is really there for, you know, that's what you want to make, you know, because if you get one set at 30 and it fills, it could go to very quickly, okay? And I mean profit, not OTM or ITM. I mean profit. So keep that in mind. And we'll kind of discuss this more in detail. Waiting for the crossover. Now this process happens every 15 minutes. Okay. So and you'll see in the video that's on our YouTube page, this one right here. You'll see in this video that there is a point when the actual pair itself on the British Gold Pound USD, when it hits here, when the 11:15 bar closes, it's like stuck right on it. It's like teetering back and forth. And then we got this particular bar that kind of set it, and then this one went up. And even though that we had a, you know, constant lower highs happening, it never broke that rule of the higher high, you know. So, but when it happened here, I knew that it could take a potential that it could keep going, because at this point I didn't want to take a chance, right? I didn't want to take a chance of losing $70. Now, did it pay off? Well, yeah, because at this time I'm thinking lose, you know, and then of course it went into the win. Okay. Using the DEX SR, the support and resistance system, is very important. Now, the model of this uses some very micro asset support and resistance in there already. Okay, so there's some keypads of high and lows happening in this DEX SR Max. But I want to show you here also how to kind of protect yourself even a little bit further for you less risk individuals, the individuals that don't want to be pressed here at this point. If it's going to hit that, you want to know, you know, like the dailies, a little bit of more of a boring trade with a couple with a working order, couple with, you know, some possible opportunities in there. Okay, so I'll show you how to do that here in a second too. And of course, you always want to use the win-loss ratio as your avoidance system as well. You know, is it something like 62% that I'm going to have to watch it like a hawk every 5 minutes, every 10 minutes, every 15 minutes? If it's got a high success rate, is it a set and forget? It still could be, but anything can cross over, you know, especially if there's a news pack that sneaks in, that kind of stuff, right? All right, so let's talk about the pair divergence, right? So let's say you see a signal comes out and it says EURUSD sell, right? And then all of a sudden you see another one that comes out in the same time frame that says British Gold Pound USD buy. And as most of you know, this is called divergent, right? So which one is divergent? Am I trading both, or am I avoiding both? What do I do here? Do I just chuck it in and see what happens? No. If there is a third pair out, okay, if you get like 2 or 3, remember, there's only 5 pairs that this can happen with. That's all we're doing right here, adhering to 5 pairs at the moment. Okay, it's the British Gold Pound USD, Euro USD, the USD JPY, and the Euro JPY. Okay, and the AUD USD. So it's only those 5 pairs. But if you see a third pair on there, USD JPY on the buy, okay, and this supports the sell on the USD, on Euro USD, right? Because being that the USD is in the primary, in the base price, and not in the quote, you see? So since it's in the quote, it's the opposite. So these two should be opposite. So this said a buy, this should say a sell. Are you getting that? Unless there's JP news, which is very rare for that to be divergent in it anyway. So this would tell you that the British Gold Pound is the one that doesn't belong, right? Go ahead, start. You can hum the Sesame Street song. That's okay. I'll wait. All right, let me show you what this looks like on the system itself. And here's where here's where it happened this morning. Let me see if that's this particular trade. Yeah, look at this. Okay, so here we are. 11 o'clock, 11 o'clock, 11 o'clock, 1 o'clock, 1 o'clock, 1 o'clock. Euro JPY, USD JPY, yay, it's convergent, bye, right? But then Euro's like, I want to be a buy, and it chucks its 10 cents in there, right? But this should have been a sell at this point, right? If everything was convergent, USD's depleting, it's floating down, USD should be a buy. Now, why would this be a buy? I mean, this should have been a sell. Why would this be a buy? There's one other reason that this could be a buy, right? Is that the euro is increasing in price, right? Euro is increasing in price, right? This pair, even though that it's increasing in price, may not decrease the USD JPY, so this shouldn't be a sell. It doesn't mean that the USD automatically deflates. It just means that the euro is getting more powerful at that point. That's the only other reason that this could happen, but this needs to be a warning and a concern. You need to see this, right? Yeah, you're still going. Okay. So with that, would you have gotten into this trade? And the answer is hell no. Okay, avoid it. First off, as soon as you see that, just run down and have a look at it, right? See what it's doing. And you can see immediately if we look at it's for a buy at 11:30 to 1300. So you're looking for 11 o'clock here. Okay, here's 11 o'clock. Now, it does have good range here, right? Looks like it's doing pretty good. 0735, and it called out for a buy at 0712, right? That was an immediate precursor for you because 0712 is way down here. You probably wouldn't have been able to get in, right? Was because there was a market flush that pushed this market up at a certain time, just at the right time. And so it did call for a buy, but it was using some pre-markers from a high-low support system that was really, really low. So you wouldn't have been able to get into a market price here anyway. Could you set a working order and set it like you would do it like a daily? Absolutely. Now these other two we were able to look at and get in for pretty good prices here, but I didn't get into the USD JPY at this particular point because I'm still trying to keep myself from getting into, in the same process, multiple base prices or quote prices or quote pairs of the same caliber. So I'm trying not to get into the JPY where there's another JPY there, right? I'm not greedy. If I want to make more money, folks, I just become very consistent at trading well and do what? CVG, right? So after you've checked your charts and you floated down, you looked, then you come over and now you're hunting. You're hunting the best price. And that's what we really got to talk about next. Okay. OTM, ATM, ITM, fire. Now, what this means is that you have an availability to look at these prices as soon as they come out, the market price, right? And where the actual spot is, the indicative price is. If you get there and the indicative price is OTM and you have like a really super high market price, like 45 or 50 or even 51, $52 in profit. Now remember, it's different in profit, right? In profit of the market price, right? So you got to keep that in mind. So if you're looking at the bid side, it might say $55, and if you're looking at the offer side, it might say $45, right? So remember, it has to equal 100 minus the bid-ask spread, right? That $2-3 bid-ask spread in there is very important too. Okay, keep that in mind. Go through Nadex Ninja to learn what that is. Okay, so if it's OTM, OTM trades are possible, and they do work very well. And why is that? Why does an OTM trade work very well when it happens? It's rare. So far in the 30-something trades that it's been on right now that I have shown, it's only happened twice for me. Okay, so the 28 divided by 30. So it's about a 7%, 10% chance, up to a 10% chance that it could happen, right? So keep that in mind, that it doesn't happen very much. It's more likely that an ATM is going to happen than this will happen about 40% of the time. All right, so 10%, 40%, and the rest 50% is on the ITM. Okay. I chose the EJ instead of the UJ because when I was trading, I was looking at the market value of the trade itself. Okay. Even though that the Euro JPY was existent, I didn't want to take a chance that these two were the divergence. The USD was a divergent marker in this. Okay. Like the USD was unstable or doing something at one and not the other. So I chose the Euro JPY at that point, being more consistent with that process. Okay. So we'll save all questions to the end. The process of getting in an ATM is very powerful. Well, first off, let me tell you, OTM pricing is huge because if you're able to get in for an OTM price of, let's just say, $55, or let's just take this back. If you get an OTM price of about $55 for profit for the market, the market does not need to move. Like if this was for a sell right here, right? The market does not need to move very many pips to put $10 of profit in this thing, right? And then it doesn't need to move very much more. And something else will happen. If time begins to vary, like if the more time goes on, even if this were to stand still, this price is going to go up, right? The price for the market price, the profit margin, is going to continue to climb. So the closer you get to this, now most of the time, Nadex will cap out at 70% of the profit margin, right? So if you got a trade in there for $55, you're looking at about a $38 cap out, right? So if you just do that quick math there, times that by 0.7, you're easily going to find out, what you could cap out at. So if you get to like $38 and you're waiting for 39, it's probably not going to happen, right? So in most cases, what I do on an OTM trade, because it's going to happen very quickly, if I get in for 55, I put a take profit in, okay? I put a working order on. I'm looking for $22 because I'm always trying to make 20. I'm always trying to make $20 profit margin, right? If this happens, this minus my $2 in fees, right? And that's what I'm trying to do. So I'm just trying to get to this number. And this usually will happen pretty damn quick. Like this morning, if I would have paid attention, I could have scalped out at 21. Okay, not paid attention, but if I not really been greedy, if I wanted to take my money and run, I could have done 21 and gotten $19. But I let it ride, right? I took that extra risk. But then I chickened out halfway through that risk. Right? Again, I just started trading live with this system. So, the testing and everything else is coming. ATM can work at just as good rate as the OTMs, okay? Because OTMs, if you're really OTM, like $60, $70, it's not going to take much at all, but it means that the pairs moves pretty hard at that point. If it's OTM at that far, when the signal comes out, there's a mistake in the system itself, okay? So keep that in mind. ATM is going to be a little bit more difficult, right, to get a huge amount of money out, but you're still going to do pretty good. You're going to be doing between 30 and 40. You see, and I got that one for 30. I got the one for 36. I could have got 39. And the average is usually between 28 and 30 is where I'm picking up most contracts, right? So if you get a $28 contract, you're really only going to fill out to about $19, $20, right? So you really want to be in this higher range at ATM if you're looking to scalp. If you're looking to scalp on the positive side, you're going to want to be about that price at the ATM, right? If not, set and forget this, or set it and watch it and do whatever you got to do to make it happen, depending on the trade currency, right? And of course, there's no real need to kind of go over ITM. Well, there is, you want to stay above $22 on the ITM, right? Sorry. Trying to get used to this new pen. The ITM is really about staying about $22 profit margin, right? Remember, that's 22 on the sell and 78 on the buy, right? And if you can kind of stay right around that, your win-loss ratio from that point is pretty high. So you could do really well. And then it's all about what was it all about from this point, right? CVG, baby. That's about all. This is what you strive for. This is what your whole world is about at that point, is creating this consistent marker without stupid risk, okay? Okay, so the ITMs are pretty certain of a win until the crossover happens. Let's talk about working orders. This is a for sure thing for a working order, but you got to keep it to a certain point, right? And you don't want this thing all the way to expiry. I haven't tested it well enough to know what it's like to have that working order all the way to expiry. Because if it's going to get a crossover, you're going to want to bail with it pretty quickly, right? You're not going to want to have this thing with a working order fill at the last 5 minutes and then fail, or last half hour and then fail. From that position and be battling the whole thing, right? So keep your working orders on, but make them so they're not just, you're not just trying to entry into a trade. Get what you want, right? If you're putting a working order on, it's a wish list, right? If you're going to wish, get 25 bucks, get 30 bucks, do whatever you're going to do at that point. If it doesn't fill, it doesn't fill. No harm, no foul. Now, the only tough part about having a lot of working orders on, which you'll find out, is that it goes in. Here, let me show you here real quickly. Sorry about that. Take you over here. Okay, so here is a British Gold Pound USD. This is a demo account that I was testing out a reverse action trade. But here's the USD in the working order right here. And you see that it has a reserve price up here of $79. It's because I got in for 78 and has a $1 fee in there. Why they don't charge you $2 is because if this were to lose, they would have to give you $1 back, right? Because when you lose, they don't charge you the exit fee, right? The other person pays it. It's pretty wild, right? Okay. All right, so that's basically the concepts behind the working orders, is that you want to make sure that you're going to only keep the working order on there for two things. One is that last half hour, maybe an hour, I'd say last half hour, you should be okay, because that crossover will start to come back, so you got to pay attention to that. And if the crossover does happen and you get in, definitely you treat it like the same thing. You bail, right? You get out. Now, we talked a little bit about crossovers in to the extent of at least seeing them and getting to know what they are. And why to look at them every 15 minutes. The important thing is to know is that the closeout of a bar, of any one bar, until it's closed, doesn't confirm a crossover, right? So at this particular point on the video, if you watch the video from DEX Trader, you'll see that this pair doesn't actually physically, when this bar closes, it's really just stuck right there, right? So then you got this tail that's happening, and when it looks like this is the pivot point, this bar this line folds down underneath a few times, and I show that. It's not until this bar closes that you get this rock solid, and then this comes to pivot point with an actual cross. And once this happens, that's when I get out of the trade, and the win. So that's, I don't mind that part of it. You can kind of see easily enough that there's some divergence about to happen. You're getting some line over. This could basically happen, but there's still a lot of opportunity for this thing to bounce and go on to the next level, right? Even though that we're sort of playing a little bit of catch up here. We still got about 21 minutes with this trade. Now I'm going to watch this for the last 20 minutes, and hopefully that this thing will act like it's supposed to, come back down, bounce, and keep going up, unless it's going to return, and then of course then we have a loss for the process. But again, we don't mind losses in the solution. They're just as important to us as the wins, because it provides us a tremendous amount of information. Okay, so keep that in mind. Using the DEX SR at all levels, because remember, this is about providing yourself with some movement in that solution. Now I'm going to pop over to my MetaTrader 4 here, and we're going to kind of look quickly what the support and resistance bars are that we have on here, and why they're so important is because that there is a process that when the signal comes out, let's look back at the signal here that happened for the Euro JPY. came out at, oops, wrong screen. Your JPY 120.48, but it came out at 11 o'clock. Let's see. Clock. Okay, here's 11 o'clock right here. I'll put a line down right here. Right there. Here's where, oops, pull that one. Got the wrong line. Here's where the expiry is. Right there. Okay. And when this came out, we had a good level to use. It was calling for a buy, and we had an SR line right here at 120.48, right? So you can kind of see that that's where this thing pops out at, and was able to give us. Now, we didn't have anything else until really, really far down, but we didn't think the market was going to move there. So in this case, there's nothing here really. The gold lines that are in here are temporaries from the high-low action. So I wouldn't be using any of that information in it because it didn't exist when this thing came out, right? We had a bunch of gold lines from other stuff around here at that particular time, which you could have used at that point. But they fade as soon as it's been completed. And then it gives you a purple line for an intraday temporary, okay? Now, we could have used that information, but it was pretty far down, right? So keep that in mind. Now, in other trades that we were on and looking at this morning, like the British gold pound, I could easily at that point when you got the crossover for the up, or even when the signal first came out, could have looked at that position of, where can I come into and get a better trade happening, right? Can I get up higher? Can I put a working order on? You can use the SR levels at your advantage. So if this came out at right around here, this particular process, so it came out and then it started to work against us and started to come up to this process here, we could have known even before the crossover was happening that we were getting a breakout happening, right, from this support and resistance line here, 24.48. We had 24.56, which was all the way up here, okay? So this could have been even more of a warning system and to kind of look to say, hey, look, we got to be a little bit careful here. Okay, so use the support and resistance as like an early detection, an early warning, and that there might be a cross-up happening, especially if you break through support and resistance, and if it continues to go down, it starts to create lower lows and that kind of stuff. But you can see easily that this kind of came up, stayed right around in this area. It never broke the previous high, kind of fell down at this point. This could have been the point that if it did break that and you did close out above that, would have probably been a better indicator. But using the support and resistance high, low, and the gold lines in here at your disposal. Okay. Now you can get that over at dexindicators.net for free. If you don't have one, learning how to set support and resistance lines on just about any table, right, really comes down around your vision of and interpretation, right? Because we can easily see that where my bar is right now. Let's see if I point that right there. You can kind of see that this line right here that you see is really a range. Now remember, support and resistance is never about one single line. It's about a range of in between, okay? So we might have a high range of support and resistance right here. This one's takes a little bit of nuance to do, and another low right here. And it's usually, if you find the middle and you come up to like the high end close and come down a little bit to some other markers in here, you usually see an even keel on both sides, right? Like something like this. So this is a nice, good support and resistance range. The same thing happens down around here. At this point, because you get a lot of resistance there. But if you were to travel back a little bit, you might see, there's not a lot from a long time ago, but there we go. You see right in here. So on this web-based chart, it's a little difficult to do, but at this line of 120.56, you easily see that there's a heavy resistance level here, right? So keep that in mind. You can set and look at support and resistance. You just have to create yourself a macro look. And this is a pretty big macro look to go back because we're looking, let me see, how long ago was that? That's on the 17th of January and the 30th. Oh, wait, 17th of January. Yeah, that was happening. So keep that in mind. You can also use the win-loss ratio to avoid or jump in and watch. This is a big one too, especially with something this new. You want to be able to look at that. Again, look at the power of this thing all the way up to this point. It's retroactive, so it'll go back and change them all. But this was all when this all was just green. It was all set 100%. So don't be tricked by that. Don't be tricked by the moment. Remember, this is sort of a disclaimer of saying, hey, you could trust the winning-loss ratio, but it still has to build up a lot of information, okay? So even if you get something that's still 100% after a couple of weeks, you have a few things to trade. You might trade that one over, say, a 66.7, all right? But you could still trade the 66.7. You just have to watch the crap out of it. Maybe less watching of the 100%, but you still got to watch. Right? The trust is there. It doesn't mean go fold in the farm, go sell all the houses and throw everything on black. It means you don't have to pay as much attention, but you still got to pay attention. That's really important for all of you to know that this isn't a perfect company. This isn't a perfect system. You still have a lot of work to do and a lot of things to build into this. Right? You have your own work to do. All right. At this particular point, because we got about 15 minutes left, I'm going to sort of end the recording on the webinar. I want you all to know that the DEX SR Max system is very powerful. It has a lot to offer, but you still have work to do in it. There's no such thing as a perfect push button system. Even the dailies have work you have to do. All signals do. And somebody who tells you that you don't have work to do, they're either a liar or a scammer or both. Okay, so keep that in mind as we get into the next level of trading together. All right. For everybody that's watching this after the fact, I want to thank you for your time and appreciate you getting through the video here and learning a little bit more about the SR Max and what to do. There's more videos on the system. We just released our new video, our new training process that's on board through DEX Signals and DEX Share. Also, there is a tremendous, powerful system on DEX Trader called the Data Processing Center, which processes all the information about the trades that you'll really appreciate. All right, for everybody else, stick around in the chat room. We'll do questions and answers here right around to the top of the hour, and then I got to get going to a few consults. Everybody else, thank you so much, and of course, as always, trade well.